but I think Sandip Agarwal is ready. Is he ready? Can we go to him?
Yeah.
Okay, so we'll take this point slightly forward. Sandip, Accenture, I think for the second time has indicated that the curve has started improving. Now, their numbers for the quarter gone by were okay, nothing spectacular about the number. But what matters here is that they are talking about good things and the worst is behind and things are looking up. How should one look into this number? Have you think large cap ITA has it got its mojo back?
Good morning and thanks for having me on the show. So, the details are in its number. I think the headline number, as you rightly mentioned, they are they are in line or I would say slightly better. But if you go into the details, there is a lot of things to read out. One, if you see their consulting order book is up like minuscule 1%, but the outsourcing book is up 41%. The book to bill for consulting is 1 and book to bill for outsourcing is 1.4. So basically, this clearly means that the discretionary side of the spend is still on a pause or on a cautious mode. But the outsourcing, which is more to do with a huge execution and a low cost execution, that is showing tremendous growth. So the point which I have been trying to make for quite some time now that there was a negative news on Accenture some time back, and if you see all the Indian IT stock, I think it's just a week 10 days back when IT index in India was down 3%. That time also in one of the media interaction, we mentioned that, for Accenture, consulting is everything because 50-60% is consulting and the follow-on outsourcing is also based on the consulting deals. But for Indian IT, the relevant number is always the outsourcing part of Accenture, and that seems to be very good. So having said so, I would say that, last 5-6 months, Indian IT index has done quite well. Indian IT stocks have done quite well. And remember, this is the industry of 5-6% industry growth with 7-8% for large players and 12-13% for mid player, and small player could be 15-16% with slight improvement in margin as scale goes up. So we should not be, expecting more than 15-20% CAGR return every year. And if in some year there is no return, it gets clubbed into the next year. So I think we have taken the underperformance of last year and we have recovered all of that and we have delivered return. The sector has delivered return this year. So I see that with all this positive news, there is some upside, but I don't see a major upside in the large names, except where the valuations are very reasonable.
Yeah, that's exactly the point, right, Sandip? Because Accenture got the fillip because of high demand from companies looking at generative AI. So you can't really make that apple-to-apple comparison with some of the Indian IT services players. It, I guess, could be restricted to Persistent and a KPIT and few other names, which have already, in any case, seen a run-up.
So yes, so I would put it this way that whenever new technology has come, if you see last 30-35 years of data, because of all our large companies basically train their people and deploy to the client to provide solutions, we take a 3 to 4 quarters gap. We run with a 3-4 quarters gap versus the likes of the who are innovating the technology, or the likes of Google, Microsoft, and even to some extent 2-quarter gap with Accenture. So we will see good general AI, Gen AI bookings and all this new technology bookings going up for Indian IT also, but with a 2-3 quarter gap. But the point is that even if that goes up, the majority of revenue for us will still be the traditional piece, and that piece has its limitation of how much it can grow on the base. So I think some of the names which has run up in last 20-25% in last 6 months, they are well pricing in all this. But only thing which probably is still not priced in Indian IT companies is the margin improvement, which should be massive because the attrition is now come down to historical lows, near to historical lows. So we will make lot of money, positive surprises, and the EPS upgrade can happen on the EPS because of the margin, but I don't think revenue growth will be massive surprise. That is already all built in the estimates of the analysts for FY 26-27 also. Second point I would like to make on KPIT and other companies which you mentioned, they are in ER&D, and in ER&D it is a decadal structural story. So ER&D is expected to grow 2.5 times of IT services. So any which ways any company there will grow at 20-25% for a longer period. But as you rightly mentioned, they are all pricing in that kind of growth, and they are also not at low multiple. So I think there is some returns, but I would not say big return. Big returns were there in January, February. I think a large part of that return is behind us.
All right. Thanks so much, Sandip, for joining in and giving us your assessment of Accenture and what it spells out for the rest of Indian IT.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.